Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. It is one of the most coveted research notes on Wall Street. We protect the copyright of all our guests. Go to DataTrek Research to get the wisdom of Nick Colas. We're thrilled he could join us this morning. Nick, I like what you say in paragraph 4. You've got a gross polarity between NASDAQ 100 melt up, right now up 1.4% this morning, and gold on GCA printing 27.05. How can gold be so different from NASDAQ 100?
Yeah, it's a fascinating topic. We kind of think of gold as a static but valuable asset, and the NASDAQ is the value of human ingenuity. And what's interesting is they're both kind of working right now, and usually it's one or the other. And we're getting both at the same time for different reasons. The NASDAQ, because human ingenuity is working, you know, the AI thing works, and chip stocks are the center of it right now. And gold is working because central banks around the world view it as a viable alternative to buying sovereign debt in terms of holding incremental reserve value. So you got both working, but it is very strange.
You are going to write this morning on China going from monetary to fiscal stimulus in what's 3 days, 72 hours? I flunked that. In 72 hours, Nick Colas. How do you fold China into the American equity market?
Ooh, that is a great question.
It's my only good one, so I'm going home.
I was just looking at the 5-year chart of MCHI, the MSCI China ETF, and I'd say anybody who's in front of a terminal should do that right now, because MCHI is trading below where it was 5 years ago by a considerable margin. So people keep looking for this China trade to finally catch up. Maybe this is the stimulus that begins to get us there. We're pretty skeptical at DataTrek, but I understand why people would want to believe so.
Where are we in the announcement of these monetary and fiscal policies? I think Tom and I both kind of godsmacked by how quickly this has been unrolled by the Chinese government. Are we at a point at which this seems like something that is remotely investable, or is there still a moment here to kind of pause and wait to see what else might be coming from Beijing?
The central issue with any of these attempts over the last couple of years by the Chinese government is you have a series of monetary and fiscal policy actions, but then you have this very different perspective from government regulators where, yes, they want the economy to improve, but they don't want to give too much power back to the very wealthy or to the corporations. And that tension has been really damaging for Chinese equity market investor sentiment. And until you see the other side of the coin also begin to maybe take its finger off the scale a little bit, it's going to be tough to bet too much on this turn, but certainly you're right that these steps have been very dramatic, very impressive.
Michael Mauboussin was with us yesterday, and we talked about this moment for small cap stocks. We talked a lot about sort of the Magnificent Seven and the run that they've had, the level of concentration that we've been experiencing over these last many months. I'd love your perspective on that as well, sort of how much opportunity there is, how much emphasis we should place on small cap companies.
Yeah, Mike's a great guy. I worked with him all through the 1990s at the old First Boston, so I have a lot of respect for him. My view on small caps is you need the stars to align pretty precisely to get the Russell to work really well. And we've seen that twice now, just in the last 3 or 4 months. You had that big rip in July, and then they fell apart again. And you're beginning to get that rip again now, but it's much more tentative. And what you need to see is a combination of lower interest rates, lower high yield spreads, and a lot of investor confidence in the U.S. economy. And as great as it is to see the chip stops working again, it kind of tells me that the small caps are going to be on the back bench until we kind of hit maximum investor enthusiasm towards the end of the fourth quarter.
Nick, we're on a streak here. We had Michael Mauboussin yesterday, as David Gura mentions, iconic Credit Suisse like Mason onto Morgan Stanley. We have Nick Colas today. I mean, you can't do better than that. And tomorrow, folks, scheduled Nicholas Nassim Taleb, who changed the world with Fooled by Randomness. Nick, I want to go to Taleb's wonderful effort, Antifragility, a property of systems in which they increase in capability to the result of stressors, shocks, volatility, noise, and UNC football. Is America prospering, Nick Colas, because we have Talebian anti-fragility where we're not afraid of stressors and shocks and mistakes?
I think that America by nature is psychologically anti-fragile. Americans are very optimistic people. They don't worry about making mistakes, and they don't criticize people that fail, at least in business. There are always second and third acts in American society. And I think by nature, we are anti-fragile. The systems we create might not be, but I think our psychology is deeply in that direction.
And I don't see that in China. Discuss. Do you see any of that? In Foreign Affairs magazine, a brilliant essay here, Ruchir Sharma writing it up, and others about a Marxist-Leninist regime. I mean, that's Friedberg at Georgetown, I believe, writing on that. Does China have any anti-fragility?
Certainly not to the degree the U.S. does. And I think the U.S. is unique literally around the world. We talk about American exceptionalism as a concept. This is where America is exceptional. Our ability to keep bouncing back from mistakes, try again until we get something right, whether it be in business or politics or anything else. And I think it's unique to our culture.
Nick Colas, thank you so much. Greatly appreciated with DataTrek this morning. I got goosebumps. I got ducky bumps. I mean, we got Mobison, Colas, Taleb, and Michael Barr.
Yeah,
all four of
Michael
them.
Barr.
It's just
Which one
too
now?
much.
The smart one or
in
me?
no particular order?
It's just too much. Nick Colas, thank you so much. We need to get right to our guests. David and I can talk all day and monopolize it. Forget about it. More important is Rob Sockin tying all things together. It's Citigroup. I want to go to China, and I thought I'd have to wait for at least 2 cups of Tang and Sanka to get to fiscal support. It happened in 24 hours, 48 hours. The Politburo comes out today and says they will provide fiscal stimulus to China. What does that signal?
Yeah, and I was like you as well. I thought this would be drip stimulus throughout the year, and maybe we get some more in 2025. This shows that China can move on a dime. We saw that earlier in the cycle when they opened the floodgates, getting rid of their zero COVID policy. Now, what does it mean? It's good news. It's more than I would have expected, but we'll have to see how the boots hit the ground and how the stimulus impacts the economy. Right now, we have a consumer there who's very unwilling to spend. Confidence is very low, and the economy's been mostly supported by the external sector. So we'll see if the stimulus is able to lift animal spirits. I think it's good news, but we'll have to wait, see how effective it is.
I go back to the conversation that we had in the lead up to the Fed meeting last week, and there was the speculation that if the Fed were to go big, that would showcase panic on the part of the central bank. Let's step back and look at these actions by the Chinese government, by the PBOC. Explain to us sort of why they're moving on a dime, why they feel the need to do this, how urgent the situation is in the Chinese economy more broadly.
Yeah, it's a great question. And I think probably they were looking at an economy as we were that was at real risk of falling short of their growth target. We recently marked down growth a bit more this year prior to these announcements, and growth next year. I know others have been marking down growth as well. And we had seen risks still skewed to the downside and had not been expecting any type of large stimulus. So I think they're seeing the data that's been coming over the last few months, which has been broadly softer than expected, and the soft data signaling even more softness. Right. So I think they got spooked by the data.
Andrew Hollenhorst this morning is looking at Euro Swissy, along with everybody else in global Wall Street. The Swiss National Bank, as they did in 2015, acts. They say enough with Swiss franc strength. We're going to cut interest rates to protect our economy. How does that tie in for our American listeners and viewers to see SNB act?
Yeah, I think really what that signals is that the exchange rate does play a role in a lot of how these central banks think. And as the Fed is easing policy more broadly, we think that opens the door for other central banks to ease as well. They don't have to worry.
It's one big global rate cut.
It's big global rate cut.
It's Jay Powell. Good morning, Bill Rhodes, the wonderful Bill Rhodes. Jay Powell is central banker to the world.
Jay Powell is central banker to the world, and I think this is going to open the door, especially if the Fed, as Andrew's been writing, continues to go more aggressively. That's going to open up the door for these other central banks to do this.
They nailed the vector. I mean, they nailed it going up. This Hollenhorst kid. First of all, he went to UCLA. David, what is college in Los Angeles?
Well,
are you kidding me?
A lucky man.
I mean, he nailed it going up, and now he's nailing it going down with a lot of rate cuts to come.
Ron, what are you listening for today when we get this pre-taped recording from the Fed chair? This has been a week, a cacophony of Fed speakers. Yeah. Now the big one comes out and gives what I guess will be just a 10 minutes remarks, pre-recorded, as I say. What are you listening for? What is going to give you any indication of sort of where we're headed from those remarks today?
Yeah, it's a great question. I think for this one, I'm not looking for too much because I don't think we've gotten a lot of data that can really move the needle. So I think it's going to sound pretty similar to how the last decision sounded and how he sounded during his press conference. But more broadly from the Fed, I'm really looking for how concerned are they about the dynamics in the labor market? I don't think it's about inflation that much for them anymore.
Right.
They're not worried about the upside risk. They said they're not going to deteriorate much more weakness in the labor market. They tell us the unemployment
Citigroup
rates.
think?
We think that the labor, Andrew's team thinks that the labor market's going to continue to weaken. They're going to have to go 50 again. And they've already told us where that bar is. They said in their summary of economic projections.
Come on, politically it's got to be 5.0%. Is like bigger than Dow 10,000.
Well, if you get that high, as our team expects, you're going to get a rapid rate cutting cycle. Okay. But if the unemployment rate kind of stays near where it is and conditions stabilize, then you're going to get a more gradual rate cutting cycle. So it really comes down to labor market conditions.
20 seconds. You want to comment on why the Yankees can't get it done?
I've been a long-term Mets fan. I don't know if that cancels me on the podcast.
I saw Linder walking into the stadium. Linder's back is really bad, isn't it?
Yeah. Absolutely. So on the Yankees
and
the
Mets people on here.
That's what I was asking.
Yeah.
I was scared to say it.
Special
I wasn't sure.
dispensation on this Thursday morning.
Rob Sockin, thank you so much. Another economic brief. And why are we doing this? We're doing this because all of this market hinges on the economy. She's lucky. She's at BMO Capital Markets, so Jennifer Lee gets to throw things at Ian Lingen, who's just wonderful in the fixed income market. She's not on speaking terms with Brian Belsky in equities. Jennifer Lee, synthesize for me, you guys at BMO Capital are just killing it. Lingen looked for lower yields. Belsky's been a confirmed bull. What are you telling them that makes this market move?
So good morning, and thanks for having me on. By the way, I love Ian and I love Brian, who's should be across
no
the
throwing
hall
of
from me
anything
right now.
there at BMO.
Obviously things have been not as bad as many economists had expected. We are continuing to stay in that whole soft landing camp, which is helping, which, Brian is obviously online with as well. And hence he's been a lot more optimistic, or still optimistic as well. But again, things are just tapping on the brakes, as I say, month after month. We're seeing slower economic data in general, but totally to be expected. But we're not slamming on the brakes. We got some decent numbers this morning on GDP, on the UI claims front. Durables were okay as well. So again, tapping on the brakes, and that's what I guess that's the best that we can hope for at this point.
Jennifer, something that we talked about yesterday was how abnormal this moment is, how far we are from what we would consider to be normalcy when it comes to the economy and monetary policy. And I'd love your perspective on that as well, as you kind of chart out what the Fed may or may not do, how you acknowledge the kind of strangeness of where we are.
Great question. So the strangeness is that after 525 basis points of rate hikes, the U.S. economy still has to have to take a significant step back. Again, slowing, tapping on the brakes and all that. But, and I'll be quite honest here, I was not in the 50 basis point rate cut camp. I was actually assuming it was going to be 25. So I won't tell you what words came out of my mouth when I saw the announcement. But I mean, I understand, he was saying, Fed Chair Powell was saying the economy is still in decent shape. The U.S. labor market is still also in decent shape. So let's just basically give them some. It's almost like, I guess, you're kind of on the way to being sick, but you're not really full on sick yet. So let's give you some medicine now to avoid that being full on sick, if you know what I mean.
Jennifer, give us a clinic on tomorrow at 8:30. PCE is the Fed's favorite inflation indicator. I get it. But are we I'm thinking Lawrence Summers, are we going to hear from PCE tomorrow stagflation or some other grand theme?
So that's another great question. So we're looking for roughly like steady-ish reading on the deflator, just about a 0.2% increase month to month, about 2.6, 2.7 year over year. It's all going to be about focusing on normally I would say spending, but also the wages and salaries component of consumers, workers that continue to see a steady rise in wages and salary, which is, I think, the most important part of all of this, because consumers need, a job, they need steady wages, steady income, just that security to give them confidence for the future. I think that is what is critical. So looking at what people are making on a month-to-month basis, and of course what they're spending on. And the last report on retail sales, if I can remember, it wasn't exactly broad-based strength. Like there was actually quite a few sectors that we're seeing that saw a decline in sales, but even the discretionary items were a little bit, we saw some up and some down. Dining out was flat. So I still think we are still seeing, some, consumers are still spending. They are still making a decent wage, but they're definitely more cautious on what they are spending on.
Jennifer, let me ask you about the knock-on effects of the decision from last week as we look at Switzerland today, perhaps as we cast our eye to Beijing as well and what that bank is doing. You may not have gotten the 50 basis points move right. I think your 9 PhDs did, however many hundreds of them. We'll forgive that. But is this playing out the way that you thought it would, that now that we're in this rate cutting cycle, we are seeing movement and change among other central banks around the world?
So a lot of the central banks, I think, because I think credibility is a huge factor for all central bankers. Even without it, they got nothing, right? So I think everyone has been very cautious on moving, especially the Federal Reserve. But now we're starting to see a little bit more. I'm starting to think maybe a bit more anxiety, only because all of a sudden we're seeing these 50 basis point moves. I think it was yesterday, was it the Riksbank yesterday that said, they're going to, they cut 25, but then they said, then they gave lots of forward guidance. We're going to be cutting for the other 2 meetings that remain for the rest of this year. And one of them could be a 50 basis pointer. So it seems like we're seeing more of that lately. So a tinge more anxiety of perhaps just again to cut off the slowdown, before it gets off too much. And then of course with China, a whole series of, they're acting almost every day this week. And of course this, I don't know how much it's going to help the Chinese economy overall, because it's all about households and consumer confidence and all that. But I think this morning's news gives us a little bit more hope that, that they are going to do whatever it takes, to borrow from Mario Draghi, to get to that about 5% growth target.
Jennifer, thank you. Jennifer Lee, BMO Capital Markets, with us here, looking at the economy, and the clear message there for me, folks: solid economy, and you see it with domestic final sales in her BMO report. With all of his expertise on the Eastern Hemisphere, his years in Moscow, and with Ethan Bronner, Bloomberg Israeli bureau chief, with us as well, with his legacy of coverage and an award for the New York Times. Mr. Bronner joins us this morning from a fractured Israel and Lebanon. Ethan, Jomana Bersachi, in her interview with Ahmed Salam of Lebanon, their economy minister, here's the quote from your story. Lebanon: we feel there is a lot of flexibility in the past 24 hours from Hezbollah's side. Discuss that, Ethan. Is there a Hezbollah that Mr. Netanyahu can speak to?
Hi, Tom. I'm not sure. And I'm not sure, in fact, this is this bizarre relationship between the government in Lebanon and Hezbollah, right? Which is that in the country of Lebanon, the government is less powerful than the militia of Hezbollah. So while he says that, we have also heard nothing official from Hezbollah about desiring to move forward with this ceasefire. And there's another fact, of course, which is that for 8 or 9 days, Israel has been pummeling Hezbollah, first with those booby-trapped pagers and walkie-talkies, and then killing off a bunch of its top people, and then bombing the hell out of a lot of its launchers, a couple of thousand spots. So it may be that Hezbollah is in the mood to talk, and conversely, it looks like Israel, feeling on the horse, is not in the mood to talk.
Ethan, the Prime Minister of Israel is making his way to New York to address the UN tomorrow, and we can talk a bit about that and the postponement of that trip. But let me ask you first, if he meets with another world leader while he's here, and that person says to him, What is the overall strategy? You talk about the explosive devices baked into these walkie-talkies and pagers, the bombardments we've seen since then. What is the answer from the Netanyahu administration about sort of where this leads to, or what the broader military strategy is?
So their view is that these militias, like Hamas and Hezbollah, only respond to force. In the case of Hezbollah, don't forget, in 2006, they fought a war. And after the war was over, UN Resolution 1701 asserted that Hezbollah would disarm and move 25 to 30 kilometers away from the border with Israel. It was unanimously accepted. They didn't disarm. They didn't move back. In fact, they now have 150 to 200,000 missiles underground, and they are right up against the border. So Israel would say, Netanyahu would say, and on October 8th, we had no quarrel with what was happening in Lebanon because of what was happening with Hamas in Gaza. Hezbollah joined in the fight and continued to pummel us, and now our goal is to get them back and to make it so painful for them that they cry uncle and move back voluntarily. That's what he would say. There's plenty of reasons to think that won't work, but that's what he would say.
Ethan, this is a prime minister who knows how to give a speech. He can command an audience,
Yes.
And we're going to get one tomorrow in the General Assembly building on the east side of Manhattan.
Mm-hmm.
He'll be fulminating. Do you expect a defensive speech? Do you expect something different? What are we anticipating we'll hear from the prime minister in New York tomorrow? I
think we'll hear from him once again that Iran, the head of the octopus, as Israel views it, has ruined the region. It has undermined the states of Lebanon, Syria, Iraq, and Yemen, and replaced the governments in those countries with militias that are do its at spec and call. Whether that's exactly true, we can discuss, but that's what he'll say. And that this is a dress rehearsal for the rest of the world, that Iran is in cahoots with Russia, China, and North Korea, and Israel is holding them back.
Ethan, living where he lives, knows that sometimes interviews are interrupted by reports of corruption involving public officials. So he'll forgive us for that as we move forward here. Give us just the update on what's been happening in the West Bank. I think, as Tom has said, there is so much going on in the region, and our focus has been drawn to Lebanon in recent days. But just give us an update on that other campaign, the initial campaign that we saw in the aftermath of October 7th. And we were talking about just moments before speaking with you, we are approaching here the anniversary of those grievous attacks.
Yes, which you're asking specifically about the West Bank right now?
Yes.
So, the West Bank on October 6th was a place where a couple of 100,000 Palestinians were coming into Israel, working, bringing back large salaries compared to what they could earn at home. And there was, of course, it is an occupied area, militarily occupied. It is no fun to be a Palestinian in the West Bank, but there was not the sense of dread that there has developed since then, which is that their movements are much more restricted. Nobody is coming into work, at least legally. And there is a sense also that there is no future for the Palestinian movement unless there's some link between Gaza and the West Bank. That's how they feel there.
Terrific brief. Ethan Bronner, thank you so much. Our Israel bureau chief today from Tel Aviv. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.